Venezuela still sits on oil, gold, and a U.S. refining empire on paper. In practice, that wealth sits in vaults, courts, and custodial accounts Caracas cannot freely spend. As of research dated Saturday, August 1, 2026, the Financial Times calculated more than $13 billion in Venezuelan oil proceeds through U.S.-supervised channels since January, while Venezuela's own public tracker has shown a single $300 million transfer back to Caracas. Citgo's parent remains under a Delaware sale order awaiting a Treasury green light. Roughly 31 tons of Venezuelan gold remain frozen at the Bank of England. That is the trouble. Assets owned, cash untouchable. So if a country owns the assets but cannot touch them, what happens to Venezuela next in this situation? This bind did not appear overnight. For years, Venezuela's state oil company and sovereign balance sheet were strained by mismanagement, contested nationalizations, and unpaid obligations. Creditors, lenders, and arbitration winners owed money, chased recovery through U.S. courts. Sanctions and banking isolation, meaning foreign banks cutting normal payment rails, made it harder to move dollars even when oil still existed underground. After the disputed 2018 presidential vote, many governments, including the United Kingdom and the United States, refused to treat Nicolás Maduro's claim as legitimate recognition, who foreign capitals accept as the government. That recognition fight turned into custodial and legal locks on offshore wealth. Gold in London stopped moving. Shares tied to U.S. refining stayed entangled in creditor auctions and Office of Foreign Assets Control licensing, OFAC being Treasury's sanctions gatekeeper. The country could still point to assets on a balance sheet. It could not always point to a hand foreign institutions would let sign the withdrawal. January 2026 reset the politics without unlocking every lock. U.S. forces captured Maduro on January 3rd. Venezuela's high court moved then-Vice President Delcy Rodríguez into an interim presidency within days. On January 9th, President Donald Trump signed Executive Order 14,373, stating that certain Venezuelan oil-related revenues held in designated U.S. Treasury accounts remain property of the government of Venezuela, held by the United States in a custodial capacity, held for another, not freely spent by Caracas. Disbursements under that order run through U.S. foreign policy instructions. Reporting through early August 2026, including Financial Times calculations echoed by ABC and others, puts collections above $13 billion. Caracas's public tracker has recorded that one $300 million entry from March. A State Department official earlier spoke of roughly $3 billion authorized or sent. The gap between public ledgers has fueled congressional demands for audits, while administration figures have said accounting firm KPMG is reviewing accounts and that every disbursement is audited. Secretary of State Marco Rubio has described phases of stabilization and recovery. Separate reporting describes budgets from Caracas needing U.S. approval before money moves. The institutional point is simple. Paper ownership and spendable cash are not the same thing when another capital holds the keys. Citgo tells the same story in corporate form. PDV Holding, the Venezuela-linked parent of Houston refiner Citgo, went through a multi-year Delaware auction meant to compensate creditors for defaults and expropriations. In November 2025, a federal court approved a roughly $5.9 billion bid by Amber Energy, an Elliott investment management affiliate. Closing still requires OFAC approval. Reuters and later industry reporting through mid-2026 described the sale as unexecuted while OFAC extends creditor protection licenses and keeps the gate shut, with no fixed deadline forcing a yes or no. Venezuela has challenged the sale in court. Creditors still want recovery on claims measured in the tens of billions across the wider dispute. Washington's post-raid oil strategy has left the crown jewel of offshore refining wealth in limbo, owned through a chain of holdings not freely redeployed by Caracas as working capital. London's vault is the recognition freeze in metal form. About 31 tons of Venezuelan gold sit at the Bank of England. Courts and UK policy after 2018 blocked transfers while Maduro was not recognized. CNN reporting in July 2026 valued that stash at up to about $4 billion at then-current prices, and noted that after Maduro's capture, then Foreign Secretary Yvette Cooper still said the UK did not recognize the Venezuelan government. Interim President Rodríguez has appealed publicly, including a letter directed to King Charles for release to fund reconstruction after twin earthquakes in June 2026. Those disasters, according to United Nations Development Program figures cited in reporting, delivered an economic hit on the order of 6% of GDP, with World Bank estimates of direct physical damage near $20 billion and a reconstruction bill that could run far higher. CNN also reported Venezuela secured about $346 million from its own IMF-related resources after ending a long freeze with the fund. Useful money, not the Bank of England bars. Put the map together. Oil cash can sit in U.S. custodial accounts labeled Venezuelan while transfers require foreign approval. Refining equity can remain Venezuelan on a chart while a Delaware order and OFAC decide whether creditors or a buyer take it. Gold can remain Venezuelan property in a London vault while recognition politics decide who may instruct the bank. Domestic pressure is documented in reputable reporting. A long depression, extreme poverty for large shares of the population, slow growth early in 2026 per central bank figures cited by ABC, and a reconstruction need after the June quakes that dwarfs the publicly traced oil transfer. Ownership on paper is not a spending plan. What happens next stays conditional because usable sovereign wealth abroad depends on other countries' courts, treasuries, and central banks accepting the hand on the pen. Venezuela could leave this bind several ways. If recognition broadens, if London, multilaterals, and major banks treat a Caracas signature as valid, gold and other frozen claims could become negotiable again. If custodial oil arrangements stay opaque, leverage stays with Washington, and transparency fights in Congress continue. If OFAC licenses the amber sale, Citgo may exit into creditor recovery. If OFAC withholds approval, the asset remains a bargaining chip. If reconstruction needs outrun transfers, pressure rises for recognition unlocks or larger disbursements. Neither is automatic. Broader recognition could reopen reserves in credit markets. Continued custody would keep Caracas budgets under foreign disbursement rules. A completed Citgo sale would strip a major offshore asset, even as some creditors recover. None of that is a forecast. It is a map of conditions. In this setup, American policy and American courts treat Venezuelan wealth as sovereign property held under U.S. rules. Oil proceeds framed as custodial deposit funds, a Delaware auction for Citgo's parent, and OFAC as the gate on blocked shares. London's gold fights the same logic. Who the host government recognizes decides whether the vault opens. That pattern is not unique to Caracas. After 2003, Iraqi oil revenues flowed into a supervised development fund held at the Federal Reserve Bank of New York. Iranian oil money has moved through escrow and third country channels under sanctions. Afghan reserves were frozen after the Taliban takeover. Libyan assets sat under international freezes during conflict. The tools differ, the premise repeats. Economist Francisco Rodríguez told the Financial Times that weak growth, despite higher oil revenue, likely reflected incomplete transfers of those revenues to Caracas. Former opposition economist José Guerra asked where the money was, citing a lack of transparency. Former OFAC advisor Roxana Vigil, writing for the Council on Foreign Relations, warned that custody without accountability and a clear democratic roadmap risks entrenching a successor arrangement rather than rebuilding legitimacy. Abroad, a country's wealth stays usable only while other countries' courts, treasuries, and central banks accept the hand on the pen. This is a history and analysis video, not financial advice. If you want to understand how money really moves, subscribe to Terminal Value.